Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, speaking to you here from New York City on the 30th day of May, 2017. Before I get into today's show, I do like to remind you that I am the author of Jay Taylor's Gold, Energy, and Tech Stocks. You can subscribe to that by going to miningstocks.com, or call our office here in New York at 718-457-1426, 718-457-1426. Also, like to encourage you to consider subscribing to Chen Lin's letter, What is Chen Buying, What is Chen Selling? You can do that by going to chenpicks.com, chenpicks.com. I'd like to encourage you to continue sending along your criticisms, praises, questions, what have you, to questionsfortaylor@gmail.com, questionsfortaylor@gmail.com. We do want to thank our sponsors to make this show economically viable. Our sponsors for today's show are Dynacert, Trimetals Mining, Telson Resources, Klondike Gold, Auryn Resources, Novo Resources, Genesis Metals, and GMV Minerals Corp. And speaking of GMV Minerals, in just a few minutes I will be speaking with Ian Claassen. He's the president and CEO of that company. And he'll tell us about their very successful exploration efforts in southeastern Arizona on a property called the Mexican Hat. And with a market cap of just a little less than $10 million, and with the potential for finding multi-million-ounce gold deposit near surface, open pitable, I'm suggesting you may want to listen to what Ian has to say, and he'll be with us right after the first commercial break. I should also mention that posted tomorrow, Chen Lin will be my guest on my Top Stock Picks podcast, and Chen tells me that he's going to be naming his top picks as Novo Resources. That's one of our sponsors that I just named. Novo Resources, Maya Gold and Silver, and Fennec Pharmaceuticals. And Chen has made a lot of money during this bear market in gold and silver in the pharmaceuticals. He always has some really interesting ideas, so you may want to check in at Jay Taylor Media tomorrow. Jay Taylor Media tomorrow afternoon. We should have that posted, my interview with Chen Lin. Of course, as a regular listener to this show, you know that Novo is personally my own top pick, and this stock has really started to move a bit now after they just recently announced a very exciting land acquisition some 350 kilometers west of Beaton's Creek, which is also progressing very nicely. And Dr. Quentin Henning was my guest last week. In case you missed that, you can go to jtaylormedia.com and listen to what Dr. Henning had to say. I think if you pay attention to what he has to say, you might understand why that stock is starting to move. Also, I should mention that Joe Masmader, who co-authors a newsletter with Brent Cook, Exploration Insights, was with me to do a Top Stocks podcast last week, and he talked about Tinka Resources, Calnex Mines, Nighthawk Gold, and Sabina Gold and Silver Corp. In case you're interested in those stories, go to Jay Taylor Media and you can listen to what Joe had to say about those companies. Well, I've titled today's show, Will Gold Save China When Its Credit System Crashes? As I just mentioned, Ian Claassen, the president and CEO of GMV Minerals, will be with me after the first commercial break. Also, unrelated, Dan Oliver and Michael Oliver return. China is expanding its monetary system even faster than the Fed and other Western central banks, but China has been amassing huge amounts of physical gold while the West continues in its disdain and blissful ignorance regarding the nature of honest money. And a systemic collapse of China's monetary system is not, in the view of Dan Oliver, in question. The question is when it will take place. And when it does, will a new, more viable gold-backed monetary system emerge that is used by China and Russia and other New Silk Road trading partners to solidify the system and perhaps compete against a dollar that may be in big trouble? At least that's the view of Dan Oliver. What might that then mean for the dollar in terms of gold? And well, those are the topics we'll talk to Dan Oliver about. And right after our first commercial break, as I mentioned, I will be talking to GMV Minerals, that is Ian Claassen, about the Mexican Hat property. And it hasn't really gotten the kind of respect I feel it deserves, in part, I think, because it's a very low grade. But there are many different aspects to making a viable and economic gold deposit, and I think most of those are present. We'll be listening to Ian to get more clarification for that, but we don't have to wait for Michael Oliver. He's with us right now. And before I say hello to Michael, let me remind you that his website is olivermsa.com, olivermsa.com. Thanks for joining me again, Michael.
Hi, Jake. Great to be back.
Always good to hear you on this show, and I tell you the truth, when you and I start talking before the show gets started, it's always exciting because you are living and breathing these markets day in, day out, hour in, hour out, I suppose, although you're not a real short-term orientated trader as far as I can tell. But I think one of the biggest questions, I mean, you've called, there were 4 major markets that you were suggesting going back a year and a half, 2 years ago, that we needed to keep our eyes on. And you were suggesting that commodities, including gold, and equities, well, commodities and including gold were headed higher. The euro was headed higher, but the dollar was going to be heading lower. The T-bond was going to, one of these days, was going to meet its zenith and was going to turn decidedly lower. Now, 3 of those 4 markets, the equity market's the only one that hasn't turned down, which you've suggested. The other 3 have. They've moved in the market. They've moved in the direction that you were predicting. We're seeing higher gold prices, higher commodity prices. The bond, the T-bond, you now have pulled the trigger on a short on the T-bond and on the dollar, a long on commodities and gold, but the equity markets continue to remain stubborn, let's say, and refusing to change directions. What's your latest take on the equity markets?
Well, I think a lot of people have noticed it. It's a very narrow leadership, but the leadership is extremely strong. It's Amazon, Google, Facebook, Apple, etc. Like 5 stocks or so, especially Amazon and Google. They're front end loaded. The Nasdaq 100 is heavily weighted toward those stocks. The ETF XLK, which is the tech ETF, is heavily weighted to those stocks, and even the S&P 500 is heavily weighted in that direction. So these indexes, where 95% of the stocks in the index are languishing, going down, or marginally going up, the entire explanation for the advance in the big name index is that narrow leadership. You used to laugh about the Nifty 50, remember that decades ago? Well, we're now down at the Nifty 5. So we're paying a lot of close attention to the technicals, not the minor day-to-day, but week-to-week, but the momentum trends of these stocks are fairly harmonious, and they're vulnerable. I get emails often from our subscribers saying, will we get a correction, a buying opportunity in Google and Amazon? And I tell them, don't wish for that, because it isn't going to be a correction. They cannot correct. They can correct a couple percent, but if you start getting into the 4 or 5% category dropping off the high, especially in a few weeks, you're going to start to break some stuff that's going to generate more decline. And frankly, much in excess of 10% off the highs, I'm going to start seeing momentum trend structures on long-term oscillators breaking down, which implies something more like what happened to Apple, which we did call in 2012, when it started to corrected 50%. And it was on its own back then, by the way. Apple went down on its own. But now we have this cluster of stocks, and they're highly technically similar, so that I think when they start to go, those who are looking for corrections are going to be very shocked about how deep the correction will be. It'll feed into, in my opinion, a bear market for them. They will probably then switch totally from vast outperformers to vast underperformers on a percentage basis. So, like, a dog on a leash, swinging one way and then wildly the other. And I suspect when they go down, the market will go down with them, but they will go down more. Why? Their technical vulnerability and the fact that several of them have committed what we call a blow-off, a vertical move that comes late in a bull trend, where it's just literally vertical. It's a blow-off. And once the blow-offs end and they abort and they start back down, they don't do it gently. They don't correct. They collapse. Now, I'm not saying they collapse off the page, but they're a lot more than what's called a correction. Let me put it that way.
Yeah.
So they should be watched.
And people should be careful what they wish for here if they're looking for a 5% correction.
If you aren't already long and ready to take, then that's the other question. People who are long enjoying this, I somehow doubt that most of them will take profits appropriately.
Yeah, well, it sounds a little bit like an article that I've got posted at miningstocks.com by David Hageth, titled "We Are Sailing into a Massive Stock Market Crash." It sounds like you and David may be on the same page, maybe for different, different.
Yeah, especially as regards that cluster of stocks. I think it might look like that. If they get into the double-digit correction, it'll get into a large double-digit correction. In the commodity area, there's one market that I haven't commented on lately on your show, and that's silver.
Yes, please do.
It's commented on all the time on the advertisements on TV. But I was looking at it today, and over the last week or so, silver has firmed up much more than gold. Silver's back up the mid-17s. Now, the high of the year this year was not as high as last year's, so there's no comparison on that issue. But we've been up at the mid-18s, okay, and then we retreated down close to 16. Now it's back up to 1750 area. If you see silver, especially anytime this quarter, but let's put it this way, you see silver hit 1870 to 1875. I've got two long-term momentum charts that say to me they're going to blow the lid off of it. So that all of this gestation, the first surge that came early last year was off the low. That was the end of the bear. And then it had this big retracement that fooled everybody. And now you're in this coiling process. But if you go back up and take out those recent highs of several months ago, which were, I think, about 1860, it's not merely a price chart takeout of a prior high, really not of great significance in that regard. But on some long-term momentum charts, it's a triple top breakout, and it should really run. So I would say right now that if you're sitting back watching silver, that's a level to be watching as the next weeks go by. If we get back up above the highs of the year, because it will unleash probably very strongly if it does that.
It'd be one of those famous Michael Oliver whoosh moments, I suppose.
A whoosh moment. It's a whoosh chart. That's what I'm looking at.
Yeah,
and whenever I identify those, I nail them on the wall and watch them.
Okay, well, we'll certainly do that. And I know you're still very bullish gold as well. Bearish T-bonds, bearish the dollar now, and the dollar... A weaker dollar should be wind at our backs for all the commodities, right?
I think so. I think it will be, yes.
Yeah. All right, Michael. Well, thank you very much. Once again for joining us. Always a pleasure listening to your ideas, your views that are based on objective reasoning and your charts.